Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Late last year, a few bullish patterns started to emerge that eventually led to a move up towards a combined resistance in mid-April this year of the 2012 high at 241.05 and the November 2011 high at 243.40. The market then headed lower, all the way back down to the combination of the bright red declining neckline of the April to May 2022 reverse head and shoulders pattern, currently at 196.60. Plus the 50% Fibonacci line of the big old 2011-2019 move at 198.30, and most importantly, the very slowly rising medium moving average, currently 204.45, where prices stabilized during the middle of May and turned back upwards. 10 weeks ago, I had a look at the longer term charts here, and this is what I saw, and I quote, "The key move there was over the 50% Fibonacci line of the 2011-2019 move at 198.30. This has seemingly validated the action since September 2022 to date as a possible double bottom, Adam and Eve type. Thus, potential targets for such a pattern. Topside will be a primary target X in the 235 even area, with a secondary harder to reach target X1, X2 up in the 251.60 area. These are early days, but that is what it's looking like right now. Well, prices reached the primary target X1 in the 235 area. Exceeded them even. However, target X2 up in the 251.60 area has not been reached. And for now, I've decided to retire this harder to reach secondary target from my daily chart. This leads us all to where we are now, and I have a conundrum. You see, to me, the action since the start of the year until mid-May looked like an inverted diving board platform with the run in, the shoot up and drop, followed by the climb out. But inverted. This is very close to the edge of the pattern. Well, actually very close to the edge of pattern recognition. If you don't know what going over the edge looks like, just Google vomiting camel if you, and you have a see what I'm talking about. Ultimately, it leaves me with just a V-top pattern, which I have long felt was only half the story. Anyway, the V-top stroke inverted diving board pattern is over, and prices created over early May a small double bottom pattern. The ambition of this pattern was quite low, only up as far as the 216 even area, which we achieved 5 weeks ago. 3 weeks ago, I was prompted to draw a bullish Andrews pitchfork for the action since mid-March to early May, which I've since finessed into a shallower bullish shift pitchfork, which you can see highlighted in dark blue on my daily chart. From this, you can see how the middle time, currently at 234.25, working initially with the congestions at 220.90 and 224.40 to 226.45, then 229.15 to 230.10, and ultimately the 212 high at 241.05. How they managed to erode prices enough to stop them rising, and dipped enough that 3 weeks ago we tested the very recent 50% Fibonacci line at 218.65, and even the green highlighted short medium moving average currently at 218.75. However, from there prices have risen, and that has questioned the validity of a possible double top for the April to date action. The question has enough weight in my mind that I drew an April to date downtrend, not highlighted as yet, but that to my mind has elements actually of this downtrend of making the whole April to date action into a possible very large sideways triangle. It is a very, very early time as yet, but this whole April to date action has me questioning myself. 15 weeks ago, prices shot up through the late January to early March bear channel line, prompting to buy the rising bright green highlighted short medium moving average, currently at 39.12. The market took its own sweet time, but it did in the end exploit the upside. I said 13 weeks ago, and I quote, "It nevertheless still lays out all sorts of possibilities topside. Thus, if we look at the bear channel as a bullish halfway hesitation, then we need to look at 2 points from where to start measuring from. The first is the January low at 27.44, and the second is from the mid-December 2023 start of the rally in the 25.20 area. Thus, for the first pattern, we'd have a potential target X in the 34.80 area, whilst from the second origin, you could see up to as far as potentially target X1 in the 3700 area, well up and off my daily chart. A few days after my commentary, target X was achieved, and soon after, the harder to reach target X1 in the 3700 area, well, that was also achieved. Prices then peaked 9 weeks ago and turned lower once again, this time with greater force, adding a changeover gap in early May that has since been filled in, and dropping down as far as the combined January high at 32.62 and the slowly rising medium moving average, which is currently at 36.12, where once again the market has stabilized. Towards the end of May, prices started rising again with a breakout over the green short medium moving average that had corralled the upside in early to mid-May. It was enough of a breakout high that prices 3 weeks ago made a new all-time high of 43.94. We have since come off a little, but seem to be rounding higher yet again, looking to challenge the all-time high even. All this action allowed me 2 weeks ago to draw a bullish Andrews pitchfork for the late February, early May action, highlighted in dark blue on my daily chart. I suspect this bullish Andrews pitchfork is key to this market, especially the lower time, currently at 38.80. The market is at the moment in between the middle time above, which is currently 44.86, and the lower time below. This is the third consecutive week that I stress how important this acute bullish Andrews pitchfork is and how it may hold the key of what is happening next.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.